Hey everyone, Adam here from Bull Logic. Hope everyone's having a good Sunday evening, good weekend to follow. Hopefully everybody's not licking their wounds from last week, as it was a brutal week if you weren't net short going into it. I like to use my Sundays here to do a nice little market analysis. I do this to get my mental game in line. That way I'm prepared. I like to lay out a bull case, a bear case, and maybe a neutral case, just to make sure that when the market does do whatever it is going to do this week, I will be prepared for either way, and I'm not going to get caught off guard. I can know what to expect. First thing I like to look at is the S&P. We did see what is going to look like a nice little breakout of this bear flag. As you see, that's a horrible line. As you see, our bear flag was holding pretty nicely with those gains. We couldn't hold any of these gains here. We just kept chopping around, chop, 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 and then Tuesday, on a short week, we finally decided to break a little bit higher and hold those gains. Looks like we were going to take out that top, maybe that 20-day moving average, maybe this resistance of that 1340 level. However, Wednesday came around and that was not the case. What we did was just flush lower, taking out those gains plus a little bit more on that day. The rest of the week didn't go any better. We did see a nice little doji candle here as support. Thought this could be a nice little bouncing area. Unfortunately, economic data came out showing that Friday was not a good day for us. We did flush lower, pushed it down over 2%, almost 2.5% below that 200-day moving average, closing at the lows. Good move for the bears there. I'm sure they're all happy. Last week, we did get a lot of news out, and Bespoke.com called it the worst week ever for the news. We said we never had news articles like that. I do believe we only had one thing that actually came out positive, a couple things that came out unchanged, and then everything else was just bad misses across the board. So that did help spark on these sellings where we finished over 3% down for the week. One of the things I like to do on Sundays is take a look at Bloomberg. I like to go to markets, economic calendars. It's going to give me an idea of what I should expect. Should I be holding positions into the night if there's a lot of news coming out the next day? Like on Friday, did you really want to hold overnight with all that news coming out? No, you really didn't. Usually that kind of news will really drive the market, and if you're holding net long or net short and the news comes out in the opposite direction, you're going to face a lot of stops. So I like to lighten up there. But taking a look into Bloomberg and the economic calendar, we got a couple of minor things. Jobless claims is always there. A couple of people speaking like Bernanke. So definitely keep that on watch. But really, it's going to be a quiet week for news here. So not much to expect there. Just kind of looking at the markets and let the trading actually happen. For a bear case, they already did their major move here below that 200-day moving average. That was a good move for them, so definitely see if they can't take out this 1260 level. If you don't remember, that 1260 level was this previous topping pattern we saw last year right before we had those August drop and those August lows. So definitely keep that one on watch for our next major support level. Below that, we're going to start looking at these different levels in here, maybe that 1200 level, maybe even that 1160 level, and then definitely down that 2011 lows for our next low point. So the bears definitely want to start creeping on this support. Maybe they won't take it out on the first hit, but if we do get a shallowish bounce here, then they will be prepared to take out that 1260 level. For bulls, we can see a nice spike up higher. We do get a lot of these washes. Support is not always an easy direct number on big markets. Usually it's going to overshoot it one way or another. Support resistance usually isn't an exact number. It's usually more of a zone when you're dealing with the indexes. So definitely look for a washout that we got plus then a bounce higher. We've seen this type of action before, both in August over here and then September we got some more washouts before we started to bounce, and then the big one was in October when we got that big washout below this support area. We did break below that support area just like we did on Friday, and then we reversed higher after putting in a little bit more lows. We reversed higher and then we rocketed up. So we definitely could see this happen again. It wouldn't be unusual. So definitely keep that on mind. I wouldn't go into too heavy short just because we could get a big reversal here. Bulls do need to start the reversal soon, as in tomorrow or Tuesday. That way we could actually get a favorable bounce. They need to confirm it with pushing the prices higher, not like we had back here last week or 2 weeks ago, where the prices just kind of puttered around and didn't do anything. We couldn't hold the gains, and we just kind of just kept it all range bound. For a neutral case, we are looking at just pretty much going sideways, digesting this big down move, just like we digested this move. We're going to see digestion, which is a sideways move. Maybe we'll see it around this 200-day moving average as the bears and the bulls try to fight it out. That's just going to lead to a choppy market where it's going to be hard to trade. People are going to get stopped out both ways, shorts, longs. Choppy markets are not fun for anybody. Definitely keep your risk lower. That way you're not losing as much. If you do have something to run, then maybe you can add into that position or just ride it out the way it is. And hopefully you can get some sizable gains that way. Now is not a good time to start swing trading. If you haven't been, I would continue not to swing trade. Even if you're swing trading to the short side, maybe you can push it with some positions that you have a good cushion on, maybe half positions. But swing trading large positions is not a good idea because we are going to get a lot more volatile if we remain below that 200-day moving average. These candles get a lot bigger below the 200-day moving average, as you can see. We had a lot of small candles, and as soon as we get below that 200-day moving average, these candles start getting huge. There's a lot of volatility coming in the markets. Definitely something to watch out for. Definitely not something you want to start swinging. Good for day trades, bad for swings. When we get back above that 200-day moving average, you can see the volatility starts to die down, and the candles get a lot smaller with some bigger candles, but it's very rare. So definitely keep your trades to day trades. Try to go in the trend. I wouldn't be too contrarian, and try to go opposite of the trend now. It's usually not just a good idea. Looking at other indexes, we can see pretty much the exact same pattern. Nothing really different here. We did see a nice head and shoulders pattern form on the Russell, which came to fruition. A nice breakdown, bear flag it back into the neckline to confirm this head and shoulders, and then we break lower. I'm actually surprised is because major patterns like this on indexes usually don't come to fruition, but this one did, and it is definitely a bearish sign here. Looking at the VIX, we see a nice spike higher, nice confirming this downward move with prices finishing at the top. You don't really want to try to add too many technical analysis features to the VIX. It's really a statistic and not something you want to try to measure with technical analysis, but you can gauge if everyone is following with you or following the market. Because if we're getting a confirming move by higher prices in the VIX when the market's moving down, that will confirm that people are being a little bit more fearful and buying into this decline. Again, I hope this helps you. Take a look at the market. I do this every Sunday, like to lay out every different pattern that could happen, the bull, the bear case, the neutral case, what to expect. And then I'm going to work on getting watch lists to fit what I believe is going to happen, is where you're not coming in with too much bias. I'm not going to go heavy short just because we closed below the 200-day moving average. I now know through looking at the chart and looking at the past that we could have a bullish case here if we do start bouncing here. So definitely keep that in mind going forward through this week. There won't be much news, so just try to trade the charts the way they're set up. We're getting a lot of nasty charts right now, so find the A+ setups, and hopefully you'll be good to go. Don't force anything. Keep your risk low, position sizes low until we get a little bit more or less volatility, a little less craziness in this with the economic news. Good luck, everyone. I'll be back later tonight with a watch list for you.